Hey there, future financial wizards. It's your favorite financial YouTuber, the Dividend Uncle, here to help you navigate the turbulent waters of the Singapore REITs market. Today, we're diving deep into the performance of REITs year to date, and I've got an interesting question for you. Would you choose to invest in the top performing REITs or the ones that have taken a beating? Stick around to find out my choice and to let me know yours in the comments below, or answer the community question that I have set up in my YouTube channel. The top 10 REITs. Let's kick things off by taking a look at the best of the best. The top 10 REITs that have weathered the storm and managed to stay afloat in the turbulent market. These REITs have shown resilience, maintaining their share prices and potentially offering stable income even in challenging times. Stability is their middle name, and they might be the choice of investors looking for a safe harbor in the storm. The top spot goes to Frasers Hospitality Trust, with a total return of about positive 12.4% year to date. This is pretty amazing considering that the Singapore REIT indices declined by about 15%. Other notable top performers so far this year include Frasers Centrepoint Trust, Keppel DC REIT, Mapletree Industrial Trust, Mapletree Logistics Trust, Digital Core REIT, and Far East Hospitality Trust. Feel free to pause the video to look closer at the performances year to date. Once you are ready, let's move on to the next segment. The worst 10 REITs. Now, let's turn our attention to the ones that haven't had the smoothest ride. The worst performing REITs, those that have seen their share prices take a tumble this year. But here's the intriguing part, sometimes, when the market rebounds, these underdogs have the potential to deliver the highest returns. It could be like a phoenix rising from the ashes. If you're willing to weather the storm with them, you might reap substantial rewards when the skies clear. But note the emphasis on might in the sentence. The worst performing REITs would be of no surprise, if you have been keeping up with the market news. The three U.S. office REITs, Elite Commercial REIT, and Lipo Malls Indonesia Trust hog the bottom 5, with year-to-date performances of negative 40% to negative 82%. The others in this list are ARA U.S. Hospitality Trust, REIT Global, OA Commercial REIT, ESR Logos and Lendlease Global Commercial Trust. This consists of some of our favorite higher-yielding REITs. Once again, feel free to pause the video to look closer at the performances before moving on. Your choice, top or bottom? The big question for you, my wise investors, is which path will you choose? Would you go for the reliability and stability of the top-performing REITs, sticking to be big guns like Frasers Centrepoint Trust, Mapletree Industrial Trust and Mapletree Logistics Trust? Or are you the type who believes in the potential of the underdogs, those worst performing REITs that could turn their fate around? And when they do, their share prices will skyrocket, but if they don't you may end up holding a lemon. Let me know in the comments, or head to the community question to cast your vote. I have set up a question in the community question function in my YouTube channel, to gather your answers. Your insights might even help fellow investors make an informed choice. The Dividend Uncle's investment choice. Now, the moment you've been waiting for, what would the Dividend Uncle choose? Well, in these uncertain times, there's still substantial risk in the market. Interest rates are high, and next moves are uncertain. Geopolitical risks, as we saw, could be triggered without any warning. For the time being, I'm leaning towards the top-performing REITs for a couple of good reasons. Firstly, stability is looking more attractive than ever. Given the ongoing turbulence in the market, seeking out stable, blue-chip REITs seems like a wise move. These top-performing REITs have demonstrated their ability to weather economic storms. It's like finding refuge in a storm shelter during a tempest. Secondly, let's talk numbers. With the recent downturn in the REITs market, many of these top, blue-chip REITs are now trading at dividend yields of around 6% or more. This is a level of yield that we haven't seen in years. It's a tempting proposition, and I find it quite attractive. But here's the twist, I'm not ruling out the worst performing REITs entirely. Remember, diversification is the name of the game when it comes to a robust portfolio. While I may be favoring the top REITs for now, I keep an eye on the high yield potential of the underdogs. I have and might dip my toes into the worst performing REITs. With their high dividend yields, these REITs can be excellent dividend boosters for my portfolio. Even with a relatively small investment, they have the potential to make a meaningful contribution to my overall returns. It's all about balance and seizing opportunities when they arise. In the world of investing, adaptability and strategy are key. Stay wise, stay diversified, and stay invested. And if you haven't already, don't forget to cast your vote in the comments or community question. Your choice could be the game changer for fellow investors. Thanks for joining the Dividend Uncle today.